Welcome. Good evening. Good afternoon. Dorian, welcome. Mary, Nick, Richard, Robert, Jasim, good to see you back again and again. George, welcome. Eric, Frank, pleasure to be here with you all. Thanks for hanging out with me this afternoon. My name is Michael. I am the co-owner and founder of BackToTheFutureTrading.com. And I'm here today to show you a new and powerful way to analyze historical data in any market on any time frame, from seconds-based charts all the way up to daily, weekly, and monthly analyses, to search for times that institutions are pushing prices higher and lower at times that are recurring over and over again lately. Let me say that in fewer words. What I'm about to show you here today is that banks don't play fair, and they push markets higher and lower at times lately that repeat. Not every day, but often enough where it provides a statistical edge and an opportunity to be in their direction when they place their orders and be swept up into their moves. So that's a pretty big promise. Sounds like a politician. Pick your side, right? Free healthcare, free oil, 20 cents gasoline. Everybody makes promises. And this industry is notorious for vendors and gurus to make outlandish claims and promises that really never had a chance of being true. So to be the Eagle Scout that I was in real life here today, to do my best, to do my duty to God and my country and you're all part of a very transparent experiment. So to prove to you that what I've told you is in fact true, in addition to the 4.8 out of 5 now Trustpilot rating, in addition to the some 3,000 plus customers we have and the 13 years being in business, we give out the times and directions in advance for Wednesday and Thursday in popular markets like the indices, forex, pairs, and crypto. We let Wednesday and Thursday pass, and then 2 days later we come back together right here, right now, today, to see if they worked or not. Now, you're saying, what does all that mean? Well, it means 2 days ago, about 18,000 people received an email with a link. And that link looked a lot like this. Okay? And so we gave out the times and directions for these markets ahead of time. All right? So for the E-mini S&P 3-minute chart today, we had that since Tuesday. Had that since Tuesday. And then we also gave you a simple trading system that we would be following. Quick question. Somebody said they're still seeing the disclaimer. Can you all see this web page right here with the warped forecasts in the banner, or is one customer having the issue? You can't. That's fascinating. Well, let me stop and restart it. GoToMeeting has a chance sometimes to be the devil. Well, that was counter climactic right there. what I was showing you before we so rudely interrupted. How about that? Can you see that web page now? Yes. All right, we're back in business. This is what I sent everybody 2 days ago. And if you missed that, I'll put it in the GoToWebinar chat box so you can see the link that I send out every Tuesday for the markets on Wednesday and Thursday. And then on Wednesday and Thursday, you'll see we have these histogram times, the times that our new advanced indicator have found that banks are pushing prices higher and lower. So I gave you quite a few of them: the S&P, crude futures, gold, the DAX, the euro currency, the Dow, NASDAQ, euro dollar, pound dollar, Ethereum. So quite a few times here today. Now, pull this over, pull that over. Let me shrink up my chart because I've got the results for all of those markets ready to go for us to analyze right here. So when we see the times for the E-mini S&P 5-minute chart, for example, I'm going to specifically be reviewing the times that I sent you for that 2 days ago up here. Boom. So before we do that, we can do it because of this patterns inside of chaos opportunity that we have. When we have vast amounts of historical bars like we do for any market that you trade, doesn't matter, there's always going to be patterns that we can capitalize on and take advantage of. And so, as I mention every week, when we see a QR code, when they first came out, people didn't know what they were. They thought it was this really weird modern art looking thing. And then we found out when we got the apps downloaded for our cell phones that there was information inside those chaotic patterns. They weren't just noise. There was important information in there. Websites, prices, text files. COVID, we learned that these were URLs or web links to online menus when the menus disappeared at restaurants, when you could even go to one. And so when we look at historical data as humans, we're really good at some things. And finding patterns isn't one of them. Unless you teach your brain to find something very specific, it doesn't see it. It doesn't know that it's there. But when we train an algorithm, an indicator, to do one specific task, it might, for example, note that on this chart, 10:35 tends to be a high frequency time, a time where markets are being pushed up. Maybe 60, 70, 80% of the days or more lately, banks are pushing the price of this market up at 10:35. You don't know that. And banks love that you don't even think that's possible. I had a friend once whose pastor told him, the devil loves it when you don't believe in him. The devil loves it when you don't believe in him. And banks love it when you don't believe these things are happening that are happening. And I'll show you here today, irrefutably, that they're happening. So markets aren't random. Having watched this now for 13 years and for thousands of customers and all of you that gave us the 4- and 5-star reviews, I'm convinced, along with Jack Schwager, author of The New Market Wizards, that markets are not random, that there are patterns in what is seemingly chaos that very bright, intelligent traders have picked up on and taken advantage of. They've seen the patterns inside of the noise and capitalized on them in their own ways. I don't believe markets are random, which is why this experiment of ours will work as well as it does. On Tuesday, again, we send out, 10 forecasts for Wednesday and for Thursday, so 20 altogether, 3 different market classes. And then 2 days later, at that point, our hands are tied. There's nothing I can do to manipulate them, and people like Jassim are coming week after week to probe and poke and see where are the shenanigans. How is this person trying to screw me like all the other vendors? Well, since Tuesday afternoon, evening, when I sent the email out, there's no possible way that I can manipulate the results. I'm here just like you, a casual observer, looking at the before and after results of these histogram times. Now, as I mentioned, these times are meaningful. So in the case of the E-mini S&P on a 5-minute chart, the indicator was trying to tell us something. It said, hey, and this was on Tuesday. The histogram times were for Thursday. And on Tuesday, it said, hey, when you get to Thursday, these are the times we want to watch for potential selling pressure. And these are the times we want to watch for potential buying pressure. And the only reason 7:35 and 8:35 and 10:05 and 11:35 and so on, the only reason these times are here is because over the last several weeks in the E-mini S&P on a 5-minute chart, somebody has been pushing prices up fairly regularly at these times. And somebody has been pushing prices down fairly regularly at those times. If they weren't, if they hadn't, the times wouldn't exist. The only reason there are times on this chart is because they were occurring with frequency. Enough times where an algorithm said, hey, what's going on here? What's going on? What's going on? So the next step is to kind of understand and differentiate between a signal and a setup. Someone earlier this week begged me for a live signal demonstration, back and forth, 13 emails. And David, I said, that's not what we do. We do this thing on Wednesdays and Thursdays. I have to see it. Okay. So I ran 2 webinars this week at the same time, my daily class that I teach customers, and then a live demonstration for this person who swore to me if they only saw it working, they would purchase immediately afterwards. Hey, Jay, I'll go over that with you here in 1 second. And so he was confused because I was taking signals in the direction of the trend. And we watched one ES trade go up 12 points or $600. And when we got to the selling pressure signal, Jay, he was mad. He said, well, why aren't we selling? It's a blue signal. It's a counter trend time. He lost his mind and he left the webinar. One $600 trade live in front of him. And then he left because he wants to take every single signal on the screen. Well, there's a difference between the signal and the setup. The signal, for example, when we look at the chart and we look at different markets like Tesla, for example, what I'm calling the signal are the places where the software was warning us about potential up movements and down movements. And so, Jay, when I look here at this screen, and I'm looking at what was expected versus what took place, I'm drawing an arrow, Jay, where the signals did what I expected them to. So, Jay, would you agree that when we got to these dates that we'd been waiting for these moves in Tesla to occur, that the signals, the raw data, actually produce the moves that we were looking for 60, 70, 80% of the time. Jay, would you agree that's pretty close? At least 6 or 7 times out of 10, when we were waiting for a time, it went up or down when we were expecting it to. Without knowing how to trade it, just generally speaking, we were waiting for it to go up and it went up. We were waiting for it to go down and it went down. Would anyone disagree with that statement? If we go and we look at the E-mini S&P on a 5-minute chart, for example, using the times that I gave everyone, Jay, take a look with me. 145, it went down. 120, it pushed up. 425, it went down. 535 Eastern, it pushed up. 605, it went down. 635, it did not go up. 710, it did go down slightly. And then 735, we finish exactly where we start by 820. 820, we finish exactly where we start by 835. And then the econ takes off, it goes up, and then it fails, drops down. 9:45, we come down into 10:05 this morning. And then Jay Trader, do you see what happens at 10:05? Can everyone see the arrows that I'm drawing on the screen? I'm not sure if my drawing objects are showing up. Sometimes GoToMeeting is weird with that stuff. Do you guys see these long white arrows on the screen? Okay. So 10:05, Jay, is the bottom. And it goes straight up. At 11:10, it pushes down a little bit. It comes back down again, but it finishes higher than it starts. So that time didn't work. But then it gets weird. It goes up at 11:35. It goes down at 12:35. It goes up at 1:25. It doesn't go down at 1:55. And then it goes up at 3 o'clock. It does go down at 3:30. So Jay Trader, is it okay if I say out of the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 signals, that 1, 2, 3, 4 out of the 19 didn't work? So 4 out of 19, oops, that's an 80% win rate, right? That's 15 out of 19. That's 80%. If I give you 4 more signals, and it's 11 out of 19, it's still almost 60%, but there aren't 4 more failed signals. So what I usually do, Jay, is I ask customers, was it 0 to 20, were the signals 0 to 25% accurate, 25 to 50% accurate, 50 to 75%, or 75 to 100%? If we do the math, the number comes out over here. But what I tell people is that I can sort of promise 60 to 70% on the signal side. So Jassim, does that make sense? What I mean by signals? Just looking at each time and with our big brains and eyeballs saying, yeah, it did that thing that we were expecting, or it finished exactly where it started. Now, While you're all is that better? It's just I have so many charts open and it confuses the platform. I just have to refresh it. Is that better? Okay, it makes sense. Now, here's the difference. And this is what I want you to understand. I sound a little like a car salesman just right there. What's it going to take to get you in one of these babies? The setup that I teach, and Jay, this speaks to your question earlier, right? Is a simple trend setup. So Jay, when I look for signals, I'm watching for signals in the direction of the trend. And I define trend with a 120 period exponential moving average. It's nothing magical. You can use different ones. In fact, I'll show you the results if you used a different one. My stop is 1.5, the average range, the average true range. So Jay, here's my stop, this distance. My entry is the close of the signal candle. Entry, stop. My target, Dave, is the next signal. I have windows of time that are opening and closing. So here at 8:42, 6:42, I enter at the close of the candle, enter. My stop, Jasim, is at the white line right here, just on the other side. And then my target is time-based. And I exit by the close of the window. Jasim, I arrive at 7:12. My entry is the close of the candle. My stop is under the ATR. This is 1.5 ATR values. So as the market expands, the stops increase. As the market contracts and slows down, the stops decrease. And then my target, again, Jay, is the next time. Does that make sense, everybody? This is a setup, a mechanical rules-based entry and exit system. So we're answering those questions. Where do we get in? What's our stop loss? What's our target? That's the difference between a setup and a signal. A setup, we're just kind of looking at the signals and saying, hey, when we got to that time, did it go down? When we got to the next time, did it go up? But if we're trading a trend signal, for example, Jasim, we might not take the up signal because that's counter trend. All right, you guys are pretty sharp. You're hanging on. Good. Let me show you the second setup that I trade that's a little less conventional. This one's called a puncture. I call this a failure with trend. A failure with trend. So Dave, if my moving average is climbing higher and higher, indicating prices are rising over time, and I get to 930, 930 has its own ATR stop, but it's on the wrong side of the line. So Jasim, I can't sell it. The trend is up. Now hang on, this is going to bake your biscuit a little bit. This 930 signal exists, David, because historically, lately, at the time of that signal, the market has been doing this. Jasim, does that make sense? Normally at 930, over and over, the software discovered that pattern at 930. Banks have been pushing price down. So Mark, what does it mean? Robert, Ronald, what does it mean if instead of going down, it starts creeping up in the other direction. What does that mean? It means that the behavior pattern banks established to the downside isn't being carried through. They're not following through on the selling pattern. They've abandoned that behavior pattern. It's like my wife and I, every couple has a fun person and a boring person. As you can imagine, I'm the fun person. My wife is very common sense. And Jassim, it would be out of character for her to wake up, put on a parachute bodysuit, and go skydiving. I'd say, what are you doing? You normally sit on the couch and watch the weather report as you drink your coffee. Not today. It's out of character. She's not following her behavior patterns. So in this instance, if I cross through the stop of the counter trend signal, it means they're buying instead of selling, potentially. Dave, my stop is going to go underneath the candle that punctured that stop line. And I'm going to hold it until the next signal. Let me say it one more time. And this was in the video that I sent all of you with the email. As it gets higher and higher and higher, when it punctures through that blue line, I go, okay, I'm in. Right here is my entry. My stop is going to go right underneath the candle that punctured that line. This is like a breakout trade. And then Jassim, I hold it until the next signal. This is a failure with trend. Failure with trend, or a puncture. Does everybody get that so far? Pretty cool, right? So if I'm afraid of sellers and I want to be in the uptrend and they don't show up when they're supposed to, it's safer than it was a moment ago for me to go long. Now, come back with me and you'll see examples of these setups. So from the US Open on CL, for example, you'll see all these trend signals and all these counter trend signals. So in CL, I have opportunities to go long when we're above the moving average. I have opportunities to go short when we're below the moving average. Same thing on our E-mini S&P. Now when we look at it that way, Jassim, I don't have to take every trade. I can filter it, right? So I can go short in the Asian session, if that's where you live, from 145 until 320 for a $7 move. I can go short from 425 until 535. I can go short from 605 until 635 for about 2 points. And then I have a puncture. It goes through the white line and it only finishes about 3 ticks in my direction. Then, Dave, I have a window of time to go short from 710 until 735. At 820, right before the inflation report, it hits my stop. And I lose $8. This one was awfully close. My stop is just on the other side of this blue line. It gets very close to it at the open. And then right here at 10:05, I'm out and I get $6 back. At 11:10, I finish negative, higher than I started by 11:35, but I don't hit my stop. At 11:35, it closes above the moving average and again finishes lower than it started. Then right here at 12:35, if you take a lunchtime trade, we finish exactly where we started, a little higher, a 2-point loss. And now it gets a little crazy. From 125 until 12:55, I'm long. There's the puncture, the failure with trend from here to here. And then from here to here, the last trade of the day. So those are my trend entries. Those are my trend entries or my setups after the fact. If we add them up real quick, and of course this is hypothetical for you guys, right? We'll do 7 plus 13 plus that plus that plus that plus that plus that and that and that. So that's the positive side, $55. Now minus 8.5, minus 2 3/4, minus 10 1/4, minus 2. So Jassim, from the Asian to the close of the US session, it's a theoretical $31 move. I think I did that wrong. Yeah, it was 446.5 times $50 a contract. That's a 1,574 day. So Jay, I still haven't answered your question, right? But can you see, Jassim, if I take the signals in the direction of the trend, it has a net positive expectancy. So what we've learned over time is from our customers, 60% of the customers who report being net profitable trade with the trend. 20% of the customers who report being net profitable trade counter trend, or what's known as a mean reversion system. They trade with a Bollinger Band or a Keltner channel, things like that. So the people who trade counter trend report an expectancy of between 60 and 70% with a profit factor of around 1 to 1. So for every dollar that they make, they lose $1. The customers who trade a trend model have an expectancy of 50 to 55% with a profit factor between 1.5 and 2. The customers who trade with the trend use about 2 indicators. The customers who trade counter trend use upwards of 4 to 5. It's a lot harder to pick tops and bottoms than it is to trade with the trend. Now, Jassim, Jay, are you still here? Jay Trader? Tell me if you're here or watching Family Feud right now, so I don't go into this to answer your question if you're not listening. Jay Trader, just hit Y if you're here. Use a tick text. All right, cool. So when I look at the patterns over the last 12 years, I wanted to show you this. The default settings for the software are 714. So Jay, over here on my chart, I can't, yeah, can I blow it up? I can blow it up. So 714 is my look back. So the magic numbers are based on a very shallow look back. Now, what does 714 mean? Well, it means this. If you think of a calendar like a tic-tac-toe board, one, two, three, four, five. and then we separate it into weeks. Jay, a 714 means for today, that's Thursday, right? I've sent software back 7 days and 14 days to look for the signals. You're welcome, Robert. So I've sent the software back 7 days and 14 days. Jay, does that make sense? So I've looked at the patterns from the ES a week ago and 2 weeks ago. Now, that means the signals are available and immutable from the close of last week. So today is the 14th, which means we've had the signals since last Thursday for this Thursday. Now this will bake your noodle a little bit. David, that means all the signals on this chart are 1 week old. All the signals on the chart are 1 week old. So how do we know if these are the optimal signals? Well, the first thing I need to do, Jay, is prove to you that this exists. And so all of the charts on every instrument for every histogram that I give out every week are a 714. So if I look at Ethereum, for example, Jay, do you see where it says 714? I'm using the same values for everything to find the setups in these markets. And then it's the same thing, right? Take the signals in the direction of the trend. Sell between here and here. Wait, closes above the moving average. Buy, puncture, sell, buy, sell, small loss, puncture, sell, enter again, small gain, puncture, small gain, buy, sell. Ethereum 714. But Jay, how do we know if that's the optimal setting? Because we have 4 different days that we can look at. 4 different days that we can look at. Well, let me show you an alternate incarnation of that signal. So over here on my third monitor, can you guys see a 3-panel thing now? Some numbers on the left, an Excel spreadsheet, and a chart right here. Okay, cool. So on this chart, can you see on this chart, Jay, how it's not a 714 anymore? It's a 1, 2, 3. That means for a 1, 2, 3, instead of going back vertically on a calendar, Jay, it's going back 1, 2, 3 days. And it's looking at the most recent price movements. So the forecasts here are 24 hours old, not 7 days old. Jay, does that make sense? Now, over 13 years, I know the best settings for almost every market. And so I know that 714 works well after 13 years. I know the 300 works well, a 1230 works well, a 9 works really well for forex and the ES, and then a 369 works really well. So one of these 5 settings, Jay, will make almost every market look amazing. So Jay, we'll do this experiment on the market you trade in a second. But what I wanted you to see was that when I test this, and I go back 45 days, right? So about a month and a half, and I just look for the signals with trend, just seeing, can you see that it's a net profitable signal, right? It has a positive Put a nice little moving average there. Let's put a 50 period moving average. Oh, so nice. These are so nice. So the model has a positive expectancy. If you trade a trend or you trade a counter trend, we're not just seeing it live in real time. Maybe today was a fluke, but I can send the software back and you'll see here that the signals are from today until June 1st. Today until June 1st. So there's a big difference between the signals and the setup. While you guys were logging in, you saw me take a trade right here from that candle until the close of the blue candle. This guy right here. Come on. That's the trade I took while you were sitting there waiting. So the model has a positive expectancy. Let's go back over and look there. And we're able to use this on different time frames. So for example, here's the daily analysis on the E-mini S&P that we reference every week. And you can see the signals that we've been following for quite some time, right? And if we follow our own system, if you're an options trader especially, it gets really interesting, right? Short from here to here, long from here to here, short from here to here, almost a puncture, long right here. First puncture, stopped out. Second puncture to here. Next short on this day to here. Next puncture to here. And then we've been short from June 27th until today. The next date is August 24th. Whoops. So it works on longer time frames for options. We already talked about Tesla and the shenanigans going on with Elon Musk, right? The next short opportunity is on July 18th. And we were waiting for prices to rise from June 21st until July 18th. All that Twitter nonsense, maybe it's not so random after all, right? And we can apply the same constructs to the euro US dollar on a 60-minute time frame or a daily time frame. It doesn't matter. Whatever time frame you're trading, the software will tell you when to look for the systems and the signals. So Jay, what market do you trade? I'll show you how we'd optimize those signal settings for your instrument. Any particular one that vexes you, we can uncover those patterns. ES on what time frame? 5 minute, 3 minute, 15 minute, 13 minute, 9 minute, 5 second. What's your poison? 5 minute. Okay, so you saw that the 714 looked really good, right? $1,500 across the 3 sessions. Let's clean it up. And now, Jay, I want you to tell me of the 5 setups, which one looks better. Ready? What setting of the 5 settings works better? So the first one we'll do is the 1, 2, 3. And I'll change that. Swing strength. So Jay, improvement with the 1, 2, 3, right? Signals are more in sync with what happened today. A little better. Now let's try the 3. Three, about the same as the 1, 2, 3. Let's go look at the 9. There she is. And Jay, you see how the 9 is better than the 1, 2, 3, the 7, 14, or the 3? That's your setting, bud. The swing strength customers at home is not 5, by the way. And now, Jay, as we go back in time, do you see where the signals are lining up? You see yesterday's flash crash? That wasn't so random, right? Would you like to have known to look for that? 750, 835, 905. And as we go back in time, Jay, you'll see the signals look almost too good to be true. So in the Parthenon of available resources, on your 5-minute chart, the winner would be this one. And it took us about 60 seconds to find it. Jasim, any questions about that? Jay? I try to tell you everything I know. I don't believe in guru secrets. I think that's unfair. Yeah, I think that's unfair. Any questions about anything I've shown you here so far? Any questions? Ronald, what pair do you want to look at, bud? They perform just as well in every market: forex, futures, crypto, and equities. Yeah, it's coming. But you need this to do it. Jay, if you don't have this program, you won't be able to do that. So you're going to need it either way. The pound dollar, what size bar? Five-minute, 15-minute, hour, daily. What do you think, Ron? Okay, 15-minute pound dollar. Let's take a look. Okay, so right off the bat, we're seeing the same kind of signals. Ron, let me get in here and do those settings that we just spoke about. You know what I'm doing, so you know I'm not jury rigging it. So Ron, if I use the 1, 2, 3 on the pound dollar, do you see how it comes into focus right away? So for you, the pound dollar on a 15-minute chart is this class of settings. Ding, 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 ding. That's pound dollar. And as you go back in time, you'll see the signals look almost too good to be true, right, Ron? And then we have the signals for the future coming up. Oh, and you can change the size of the swings that you're looking at. So Robert, if you want to look at larger moves, you can tell the software to look for larger swings. If you want to look for smaller moves, more frequent times, you can change the swing strength lower. And now you have more frequent turns. So yeah, it works on your pair. No problems. So Robert, you're asking a trade management question as opposed to an analysis question. You're asking a trade management question as opposed to what the software does. You know that you're kind of outside the bounds of what I'm demonstrating, right? So here's my software, and over here is your question. Generally speaking, though, most people will tell you that are mentally sane that they don't risk any more than 1 to 2% of their account on any trade. There's also a really good book that you can read that I adhere to. I don't have time to get into it. And so what I'll do, Robert, is I'll send you a copy of the book. It's called The Trading Game by Ryan Jones. And he talks about something called the fixed ratio. So Robert, can you see this link in your GoToWebinar chat box? We'll use my example as a platform for this. Robert wants to know, when do you increase or decrease your contract, and how much do you risk? So Robert, Jones has a really interesting theory, and this has nothing to do with the software, by the way. We're going down a road, but I want to answer Robert's question because I think it's important. And Jones basically says this. He introduces somewhere around page 120 a concept called trading the moving average of the equity curve. No, I want to answer it. So in that book, there's a chapter called Trading the Average of the Equity Curve. And Robert, what he says is this. When your account is over the moving average, you trade live. And then Robert, he teaches when your account is below the equity curve, you trade in sim. And then when it crosses back over, you trade live again. Tell me if you understand that part of it. And you can read more about it in his book. So Jones basically says there will always be a drawdown. There will always be an equity curve plateau. And so what ends up happening is you win, you start to lose, and then Robert, it's flat. You go into a plateau. And Ted, you're entering the values in real time. You're still entering the values of the trades. You're tracking them while you're sitting there. And then when it comes above the moving average again, you're trading live again. So Jones basically removes the potential for drawdowns out of your trading system. And I have a really good video on this. Let me show it to you here on our YouTube channel. It's probably one of our most viewed videos. But Ted, this doesn't answer your question yet. We still haven't addressed it. I think it was called the Holy Grail. There it is. So Ted, if you want to learn more about that aspect of it, there's the video on YouTube. But number two, the thing that he teaches in the book to answer your question is this. He says, listen, this is a way to preserve your account and prevent risk. And that's why I love these outputs from the Warp software. But he says, I want you to use something called a delta or a fixed ratio. And in his book, he talks about, let's say, for example, you have a $10,000 account. And so he says, let's say your delta is $2,500. So now, when your account, let's say this is the market's trending and all our trend signals are working. Ted, every time our account size increases $2,500, we add a position. So if it goes from 10 to 12,500, we add a position. If it goes to 15,000, we add another position. If it goes to 17,250, we add another position. And then as you drop 2,500, you take a position out. And that brings you out of your weighted position faster. So what ends up happening is you end up coming up this way faster, and then you drop faster into your sim, and you make more faster. And so Joan basically says when the model is profitable, when the conditions are favorable, you're increasing your position size and making hay while the sun is shining. And then as your fixed ratio delta is getting hit on the downside, you're coming out of warp speed very quickly, decreasing risk. And then in the eventuality that it draws down, you're in sim and tracking that and putting the results in. So that's the philosophy I adhere to. It took me about 11 years to find that, and I actually have a spreadsheet for that somewhere where you can enter the values. I think it's in my downloads folder. Let me see if this is it. You caught me, yeah, right here. So Ted, can you see my chart right now? So this is, I paid a programmer to build this spreadsheet for me. So you have the two charts. You have the actual trades, the actual equity, and then if you took every trade. So if I increase the size of my moving average to like 100 period moving average, watch the bottom chart. Ted, you see how it flattened out? And if I use an aggressive moving average, like a 10 period, you see how the drawdown was bigger? Jones says you should start out with a 20. So somewhere around a 50 is pretty smooth. And those of you that trade and try to get funded accounts with Top Step Trader or Apex, this is a definite method you should follow. And you can see where the account goes from sim to live and back and forth. So it keeps you out of the market when the conditions that aren't favorable for your model, in this case, when the market is consolidating, you're in sim. But when the market is trending, you're back in live again. And you can sort of see here when the market is trending and when it's consolidating in the values. And I have another sheet, Ted, that allows me to put the delta in to increase my position or decrease my position with my delta. So did I answer your question, bro? As engineers, we kind of think a little outside of the box. No, it was a great answer. I got to show people how smart I am. Ah. Okay. Any other questions about these markets or the settings or how this works? Does it work on my forex pair? Does it work on this crypto? Does it work on such and such? This will also work on tick bars, range bars, volume bars, and Renko bars. So if you trade one of those bar types, you're going to be in luck as well. Any other questions? Jasim, this is your week to sign up, bud. This is it. I can feel it. I feel it coming. I feel it coming. I feel it coming. Woo-hoo. Anybody? All right. Now the fun part. The part where I get to tell you how much money you're going to give us to have this amazing tool so that tomorrow morning when you wake up, your best chance isn't that ton of crap lagging indicators. And don't tell me I've been doing it for a bunch of years and I'm pretty good, blah, blah, blah. It's junk. You're sipping out of styrofoam cups, and I've got the Holy Grail right here. That was a load of horse poop. Yeah, Robert, it's the same. It's all the same. So Robert asks, do you have rules for options traders? So Robert, for example, I didn't mean to get too far ahead of us here, but let's say, Robert, we look at a stock. I was looking at Alibaba with a customer a few minutes before the webinar. And then we load the software on top of it. So Robert, you see the signals? So is it any different than my ES 5-minute chart? Put, 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 call, put. Yeah. Or if you're in the money, right away, take it and leave. Get out. There's Apple. Does it work with Apple? Kinda, right? Does it kind of work with Apple? Can we say yeah? Yeah, man. It's the same way. When you're not using this tool, now that you know it exists, you are effectively choosing to trade blind. No, thank you. I appreciate the questions. I like being poked and prodded. It helps me keep everything legit. Look into your GoToWebinar chat box, and you will see a link. Dave, you can trade weekly options, sure. Richard, those settings were default 714 swing strength 8 for both of those. 714.00 calendar, swing strength 8. Loading 3,650 days. Woo. At the bottom of the page, the link that I gave you is a giant Willy Wonka orange button. No, you're welcome, brother. If you click on the Buy Now button, you'll see an annoying pop-up. We have a class that meets Tuesday, Wednesday, Thursday from 8 to 12 Eastern. That's taught by my partner and best friend, fellow engineer, Ron Gardner. Ron shows live entries and exits and helps customers get started learning how to get in and out in the popular intraday futures market instruments. If that's something you're interested in, I think you should take at least a month of it. But if you don't need it, you just kind of learn on your own and figure it out as you go, don't buy it. But if you're a hands-on, show me how it works kind of person, there is a class that's available. It's normally $200 a month, $50 a week, 1 ES point a week, but we take 25% off if you start out with it with the software. I don't want it, I don't need it. Click the blue button, don't get it. Giant purchase agreement, blah, blah, blah. Here's the crux of it all. You're going to get a lifetime license. Did I spell license right? I can't tell. You're going to get 2 computers, laptop, desktop, I don't care. Share one with your brother-in-law, doesn't matter to me. This is lifetime updates and free installation. There is lifetime video training. Archive, where we have dozens of 5 to 10 minute videos explaining how this works, the best settings, etc. And there's a promo code because you sat here and listened to all of my insanity. Remember, in the ES, in just one day, we saw $1,500 worth of setups over the course of the one thing that I showed you. That was since June 1st, 1,600 points times 50. You can start to do the math. That's $80,000 using the setup that I have over on this other chart. Your promo code is W lowercase ARPOFF, and that takes $500 off. Your promo code is WARPOFF. No spaces, no capitals, warp off. And when you put that into your little promo code right there and hit apply, you'll see it takes $19.95. Now, if you don't want to do PayPal, click this button. This button does credit cards and all that stuff. If you want to, and you have a PayPal account and you want to do their pay later 6 months of payments, you can do that as well. But if you don't want to deal with PayPal at all, don't use any of that stuff and just click the checkout button. Does anyone have any questions about any of this? How long does it take to get set up? Yes, Robert, it is. Would you like information on that? Okay, there's actually a class for it tomorrow at lunchtime. So if you get it before then, you can come to the class. No other questions? Okay. You guys are awesome. Anyone signing up here tonight and they have questions before they get started? Jasim, is today your day? You told Ron that you needed a week. It's been a week. Hulu, next 30 to 60 days, yes. Ronald, don't use wishy-washy words like impressive. I want you to have it. So the words I'm interested in are, yeah, you're still there. But what does that mean? Right? Are we engaged for 17 years or are we getting married? Where's the ring? Thank you, Earl. When you get up to trade tomorrow, you now know that there are times where these moves are going to happen in the future. You know they are. You've seen it. 13 years, over 600 webinars, it happens every week. If you go back and you look at the reviews people have left me, you'll see that over and over and over and over and over again, real customers with real receipts and real experiences are having their turning point moments. These are actual credit card carrying, receipt bearing people. No one works for me here. These are all actual people. And so not purchasing today and saying things like, it's fantastic, impressive, I'm still here. It's not a commitment. You're doing yourselves a disservice using the lagging indicators that you've been using, the methods that you've been using. You're walking around with a blindfold that you've tied to yourself on purpose. So today is your day. My father used to say, knowledge without action is useless. Knowledge without action is useless. He was a tough man. I told my kids they don't know how good they have it sometimes, but his father passed away when he was very young. He was raised by his friends, essentially, in the neighborhood back in Valley Stream, Massapequa, Long Island, in New York. And he had to figure out a lot of stuff on his own. He told me things like, it's not what you know, it's who you know. It took me years to figure that one out. But knowledge without action is useless. Futile was his word. Robert, if you need it, just tell me and you can have it. If you need the one over the other, you can have that. I don't mind. Oh, Dorian, Optimus, the thing we were talking about, the auto. Thank you, Earl. No, Junior, I don't have any of the dailies there, but yeah, no, that's cool. Robert, it's mostly video now. Ron's uploaded all of the things he teaches, and people can kind of hit the pause button and do that as well. All right, so before we go, I'm just going to keep track of who was here and who was interested. So Ronald D, you were interested. Jay, you were here again and you were interested. Juseem was here again, my buddy. My buddy, he left. Wherever he goes, I'm gonna go. So Ronald, we're gonna harass you by phone. Jasim is gonna get harassed by Dave. Anybody else interested in learning more after the webinar or who has other questions? No? Okay. On behalf of everyone here, yes, Dorian. Thank you for your time. Richard or Robert, I have to give you information on PDT. I will get that to you as well. Thank you everyone for attending here today. We'll get a recording out with what was taught here today. I hope some of it was useful. I hope some of it was entertaining and some of it was enlightening. That's my goal every week at least. Train, don't sell. Teach, don't push. And after 13 years, we've grown quite a community doing just that. May the wind be at your back. May the glorious golden sun shine upon your faces. May the valleys rise up to meet you. May the mountains of adversity lay low before you. We're coming into the golden season. End of August, September, October, November are the best trades of the year. Most of the customers make, I would say, over half of their profits in the next 3 to 4 months. Every day that you wait to do this, you are losing money, in my opinion. The opportunity cost of not moving forward today was $1,500 on the ES. The opportunity cost of sitting in front of your computer every minute of the day wondering, is this going to be my signal? How much of your life, time-wise, are you willing to give up? We're hoping that will save you some time and make you some money in the long run. I appreciate you. Love you guys. Thank you for your support, and have a great evening. Take care.